One narrow route controls the world's oil, and if it shuts, markets won't correct slowly, they'll crash instantly. Some of the biggest financial shocks in history didn't start on trading screens. They started in places most people never look at. Not in boardrooms, not in earnings reports, but in narrow geographic choke points that quietly control global systems. And right now, one such point is sitting at the center of rising tension with the potential to ripple across every major market. There's a narrow waterway in the Middle East that carries a massive share of the world's oil supply, the Strait of Hormuz. Every day, tankers move through this route like a constant pulse keeping the global economy alive. Now imagine that pulse slowing down or suddenly stopping. The effect wouldn't be gradual, it would be immediate. Oil markets react faster than almost anything else. A disruption here doesn't wait for confirmation. Prices spike instantly. And because oil is deeply connected to transportation, manufacturing, and energy production, this spike spreads across the system. Fuel costs rise. Shipping becomes expensive. Production slows down. And suddenly, inflation starts building again. When inflation rises, financial conditions tighten. Central banks like the Federal Reserve don't have many options. They keep interest rates elevated. Liquidity becomes tighter. Money becomes more expensive. And this is where markets begin to feel the pressure. Growth-heavy sectors don't respond well to this environment. Technology companies dependent on long-term projections start facing valuation pressure. At the same time, their operational costs increase due to rising energy prices and supply disruptions. So they're squeezed from both directions. Rising costs and falling expectations. Now layer in another problem. Global supply chains are already stretched. A disruption in a critical energy route affects shipping timelines, freight costs, and production cycles. Industries like semiconductors, electronics, and automobiles begin to slow down. And when production slows, economic momentum weakens. There's a simple way to think about this. The global economy doesn't break all at once, it stumbles first. Kind of like your internet connection, it doesn't disconnect immediately, it starts buffering before it collapses. Now here's where it becomes relevant to you. Whether you're investing in domestic markets, global stocks, or mutual funds, everything is connected to the same system. So even if the disruption happens far away, the effect eventually reaches your portfolio. Because markets today are not isolated, they move together. Here's something important. Markets don't wait for events to fully unfold. They react to signals even before the full picture becomes clear. A potential disruption is often enough to trigger repositioning. Capital moves. Risk exposure reduces. Volatility increases. And this is how small triggers can lead to large reactions. What makes this situation powerful is not just the event itself. It is the sequence it sets off. One disruption leads to another. One pressure point amplifies the next. Before you realize it, a localized issue turns into a global financial shift. So the next time markets move suddenly, look beyond the charts. Sometimes the real reason is not visible on the screen. It is unfolding somewhere far away, quietly influencing everything. So tell me this, do you focus only on price movements or do you try to understand what is driving them? Drop your thoughts below. And if you like understanding how global events quietly influence your money, hit like and subscribe to WealthyKlicks, because we bring you these hidden connections every single day.